Thank you. A lot of people know Jamie Dimon as the CEO of JP Morgan. For a long time, she has been one of the greatest opponents of cryptocurrency. He has said that Bitcoin is a scam, that all crypto is worthless, and that people should not buy any of it. Behind closed doors, though, something very different has been going on. Tonight, the shocking truth about a secret JP Morgan memo will come out. The memo shows how the bank really feels about crypto, and XRP in particular. Many things Dimon has said in public are not true. The world's largest bank is getting ready for a financial restart that could make XRP valuable again. $12,000. Yes, you heard that right, $12,000. But how does someone who says crypto is a scam run a bank that is getting its private clients ready for XRP to lead a change in digital assets? That's why this is one of the most dishonest money stories ever. Sources close to JP Morgan say that this secret letter was sent to their private wealth management section. This division works with large institutions, sovereign funds, and individuals who have a lot of money. A company study says that by 2030, tokenized assets will be worth more than $300 trillion. This is what the letter talks about. The infrastructure needs to be instant, adjustable, and able to work with other systems for that level of tokenized settlement to work. Also, do you know what? According to their plan, it is only the XRP system that can meet those needs. Let's talk about XRP now. You already know that Ripple is more than just a cryptocurrency if you've been paying attention. It's also a strategy for liquidity. For just a few hundredths of a cent, it lets you send money across countries in seconds. It's worked well for over a decade. But what JP Morgan said totally changes everything. In public, banks made fun of crypto, but behind the scenes, they were looking for a blockchain that could beat their tokenization engine. They were scared by what they found. Stocks, bonds, commodities, real estate, swaps, and other things can all be turned into XRP tokens. Can do this while still following the rules, being auditable, and being clear to officials. That's why the note says XRP isn't just a coin. It's been called an asset and a global cash bridge that could help the financial system in the future. Think about that for a moment. It's not a secret that JP Morgan is one of the world's best banks. They deal with deals worth trillions of dollars every day, have some of the biggest books of derivatives, and are connected to almost all of the big banks. If they're getting ready for an XRP-led future, it means they're not just experimenting. They're setting up. What's the joke? Small investors were told by Jamie Dimon to stay away from crypto in public, but his own bank lets wealthy clients invest in crypto through secret investment vehicles. A tiered client access plan is said to be explained in the letter. Through JP Morgan's Onyx blockchain business, some clients would be able to get early access to pools of tokenized assets under this plan. Yes, that's the same Onyx that has been adding Ripple and trying out different ways to get XRP. Another question is why XRP instead of JPM's own coin? Here's the catch. From one JP Morgan account to another, the JP Morgan coin can only be used. It's like a closed loop. It does not always work. It can't connect to other networks or get open funds. On the other hand, XRP is not controlled by one group, is open source, and can connect any network to any other network. It was clear to everyone at JP Morgan that this was true. If you want to build a tokenized world market, you shouldn't use a private coin. Something that works on all bridges is what you need. There are computer models in the study that show what would happen if XRP was used to settle just 10% of the $300 trillion global derivatives market. In theory, this means that each XRP is worth more than $12,000. That's just because they need the money, not because of reports. It's not about the hype. It has to do with wanting something of value. Things are getting really interesting now. Dimon may not be lying when he says bad things about crypto, but he wants to change the subject. While people were arguing about Bitcoin, JP Morgan was working behind the scenes on a much stronger system that uses Ripple's technology. The tokenization team at JP Morgan is said to have done several tests at the same time. Blockchain platforms like Ethereum, Hyperledger, and the XRP ledger are being used. Ethereum couldn't make payments happen in real time because it would have used up too much gas. Hyperledger didn't work with other systems around the world, but XRP always had very low fees and settlement times of less than 3 seconds, even when traffic from around the world was faked. The internal conclusion is that the XRP ledger is the best way to turn large organizations into tokens. Now is the time to talk about plans. JP Morgan knows how to get rich. They don't buy when prices are high. They wait for the market instead. To say that something is dead and then slowly add to what they have while everyone else is busy. Remember gold from the early 2000s. The same plan. They saved up gold and then sold it to regular people when the price went through the roof. It looks like XRP is following the same trend, which is to go down before going up. This time the repression comes from public question, which is led by Diamond himself. They can build up risk at lower prices before, showing full-scale integration by discouraging retail interest. It's one of the oldest tricks used by bankers. Not what you tell the people, but what you do behind the scenes. In fact, over the past year, several reports from blockchain analytics companies have shown that institutional wallets connected to big banks have been slowly building up XRP. Banks are quietly getting ready for the utility phase of digital assets, and XRP is at the center of it all. The media is currently focused on Bitcoin ETFs. The memo even shows when digital assets will merge. It says that by 2027, all major financial markets will be tokenized and settled through open ledgers. This includes U.S. Treasuries, mortgage-backed securities, and business bonds. From what they've learned, the XRP system will be able to handle 15% to 20% of that market. Take a look at that in a bigger context. It would have to cost more for XRP to circulate if it took even a small share of the world's settlement liquidity. This would make it possible for trillions of dollars to move in real time. The numbers make it clear that not only is a 5-figure price possible, it's also must. Why is this JP Morgan reveal interesting? Because it stands for something very important. This bank is a great example of the kind of slow, controlled system that Ripple was made to get rid of. They know they can't stop what's going to happen, but they're not going to try. They're not fighting it. Instead, they're quietly joining it. Behind the scenes, JP Morgan is putting up liquidity nodes in Asia, the Middle East, and Europe that are linked to Ripplet passageways.